very much for that great introduction. I'm Matt Harris. Incredibly pleased to be back among the Endeavor family. I have been to a bunch of ISPs. I'm going to London later this month, and it's just always thrilling to interact with the energy of the Endeavor team and the Endeavor entrepreneurs. So thank you so much for having me. You've heard brief introductions of my two co-panelists here, but I'm going to ask them in a second to add a little bit more detail, maybe give you 30, 45 seconds more about who they are and where they come from, just so we're all situated. Myself, I am a venture capitalist. I've been doing that for about 20 years. The vast majority of that focused on financial technology. And so when Bitcoin blockchain emerged on the scene, it was obviously very relevant for me and for my portfolio companies, and so I spent a bunch of time on it. We were meant to have a fourth member of our panel, Vinny Lingham, a good friend of ours. He's got the flu. So what I'd like to do is ask you guys to think about yourselves collectively as the fourth panelist. We have a room of incredibly talented entrepreneurs here. You guys are more used to and more suited to being the content than the audience. And so I'd like you to be part of the content here today, too. We'd love questions throughout the panel. We're going to be talking first about digital currency, Bitcoin, Ether, the sort of roots of this thing, and then we're going to talk about blockchain as a business tool. But we want to know what's on your mind, and so we welcome you to raise hands, to call mics over, and we can turn this into a broader conversation. So Christa, maybe give us a minute on yourselves, and then Wences, and then we'll ask some questions.
Certainly. Good morning. So, good morning.
See, they're already interacting.
Exactly,
That was good.
Yeah.
That was good. This is working.
Trying to follow instructions.
There you go. Entrepreneurs usually not good at that, but thank you for trying your best.
So I'm a 20-year banking veteran. My last stint was as president and CEO of Mechanics Bank in the Bay Area, a $3.5 billion community bank. And we sold the company in 2015. And shortly thereafter, I got immersed in fintech, and I've just been having the ride of my life since I left Mechanics in 15. And I've gotten very involved in blockchain technology, so I guess I am a blockchain guru. So there you have it.
Good morning. I'm Wences Casares. I'm originally from Patagonia, in the southern part of Argentina. I'm a fintech entrepreneur my entire career. About 4 years ago, I ran into Bitcoin by chance, and I slowly, after 6 months, I fell in love with it, and I decided to dedicate the rest of my career to it, to Bitcoin. And I run a company called Xapo. We're the largest custodian of Bitcoin in the world, and I'm also on the board of PayPal.
Thank you for that. I can't tell you how many people I've run into in my walks of life in fintech and venture capital who say some version of the following sentence. You know, I wasn't really interested in Bitcoin, certainly didn't believe in it. And then I had coffee with Wences, and now, all of a sudden, 10% of my net worth is in Bitcoin.
I felt that same way.
Yeah, exactly. He's a compelling evangelist. So let me put you on the spot to start. There was the day before Bitcoin was invented, and then the day after.
Yep.
What happened in between that one day and the other? What was new to the world, and why should we care about it?
I think it's important to think in terms of those first principles, because in the middle of the hype, a lot of good information gets lost. Right now, there's a lot more noise than signal in general with Bitcoin and blockchain. And to make sense and to find the signal, I think it's helpful to go back to, okay, what does this technology bring that is new?
Yeah.
And forget about the rest. And what it brings that is new, anyone can understand. People make it more complicated than it is, perhaps because it makes us sound more intelligent. But just like anyone can understand the internet, anyone can understand Bitcoin, right? And blockchain. And what is new, basically what happened on January 2009 is that for the first time we have a database that nobody needs to trust, or that works without trust and works without permission. And that seems very conceptual or high level, but it means very concrete things. Before, when you had a database, someone had to run it. And you had, either you run it yourself or you trust someone else to run it, and you had to trust the hardware, the software, the jurisdiction where it's at, the legal framework around it. And you had to ask someone permission, or if it was your own, you had to give permission to who could access it and who couldn't. And all of that, in January 2009, vanished. You have a database that no one cares what hardware is running it, what software, what jurisdiction, and it doesn't matter. And it's it's a third-party database where the third party doesn't exist. Right? It's completely invisible, distributed. You can call it many complicated things, but basically, that is what is the big breakthrough. It's a database that works without trust and without permission. If anyone can access it, and nobody can change that. That's quite a breakthrough, right? From computer science point of view, but also other points of view.
Mm-hmm. And so this, we can acknowledge, is new to the world and a breakthrough. That doesn't necessarily mean that somebody like you, with your accomplishments and your opportunities, would dedicate the rest of your life to pursuing it.
Correct.
So take us from that intellectual breakthrough to the seed of an idea that's so totally captivated you.
If someone had shown me Bitcoin anywhere from January 2009 to January 2011, my story would be very different, because I would have disregarded it. Because I would, let's say that you came and you explained it to me, and you explained it well, and I managed to understand, and I understand the power of the blockchain and how it works and how it's completely trustless, distributed, and anyone can access it without asking anyone's permission. But for that period of time, the tokens, the Bitcoins, were worthless, or like monopoly money, right? And there was no price, and you can just exchange them for free. And I would have said, I understand, but imagine what would it take for people to agree to create a social consensus that these tokens have a value different than zero. I would have said that the chances of that happening are zero, or very, very low. And because it's a truly worthless token. The only thing that will give them value is that we all agree that they have value.
Like all money.
Like all money, exactly. Most people don't understand what you just said, but I didn't understand it before I got into this, right?
People from Argentina understand it a little bit better than...
You know, there was a time on Earth and maybe in the universe where there was no life. And then there is a precise second in which there is life. It's like magic, right? There's no life, something happened, we're still debating, have a general idea what happened, and there's life, a cell. And in January or February 2011, something like that happened with Bitcoin. All of a sudden, someone was willing to pay 9 cents for a Bitcoin. And that is magic. That is and I was fortunate to find Bitcoin after that happened, because it made me take it a little more seriously, saying there's already a social consensus developing around these worthless tokens that gives them social value. And I believe that there is a 20% chance that Bitcoin fails. It's an experiment, it's super experimental, it's still like the internet before the browser. You know, it's for techies and super early, it's gonna take decades, not years to develop. And there is a non-trivial chance, I think, that higher than 20% that it fails and it's worth zero. So, and if I say 20%, probably it's higher because I'm very biased. So what I tell everybody is you should not have any amount of money into Bitcoin that you cannot afford to lose. But I also strongly believe that there is a higher than 50% chance that a Bitcoin is worth more than $1 million sometime in the next 5 to 10 years. And if that is true, everybody should own a little, not more than 1% of your savings, but it'd be silly not to have 1% of your savings in Bitcoin. Why? It's so asymmetric, right? You can say, you can either tease me for life, or you can say, I'm glad I listened to this idiot because it's 10 times my value.
See, you can see what he's doing here. Now we're all going to go buy some Bitcoin. Christa, so I think these origin stories are kind of a nice way into Bitcoin. So I'm going to ask you as well. So you had been a traditional banker. And then here you are, a blockchain guru. So there's an arc there for sure. Can you tell us when you first heard about Bitcoin, and like, again, what captivated your imagination about Bitcoin, and then perhaps subsequently the blockchain?
Sure. So I went from email addiction to LinkedIn addiction after I left Mechanics Bank. And I had one of my former employees send me a text and said, hey, you got to go in and update your LinkedIn profile because it says that your anniversary with the bank, you're about to celebrate another anniversary with the bank. So I went in and I started, that was the first time I'd been in LinkedIn in a couple of years, and I started going through the feed, and I saw all these articles on this Bitcoin and this blockchain, and this was about a year and a half ago. And I started exploring R3, and I started looking at a company called Blockstack in San Francisco that had sold to a company called Digital Asset Holdings in New York, and this Blythe Masters that had left JP Morgan. And I started doing a little digging and said, I want to learn more about this. And I started hearing about the low-hanging fruit in my industry, which I know well, of all of the inefficiencies that financial institutions have in the settlement process for foreign exchange. To bonds, like if you're, when you try to settle a loan transaction or any type of investment instrument, it takes a long time. It can take anywhere from 2 weeks to 30 to 40 days. And I saw where this technology is saying it can be done in less than 10 minutes. It was mind-blowing. So that was my introduction. From there, I ended up reaching out to the founders of Blockstack, who were headquartered in San Francisco, visited with them, which led me on this, what I call down these paths of rabbit holes that has been just a blast. So I'm an owner of an investment bank in Atlanta, Georgia, where we're the market maker for 850 banks across the US, and we have about 3,000 bank clients. We have a fixed income desk. So obviously this is near and dear to me just on the trade side. But I've since then gotten way outside of just the financial sector. I've been involved in insurance, pharma, to music, to all kinds of things. And Don Tapscott brought me into the fold and invited me up to Canada with some of the smartest people I've ever met, what I call true world thought leaders in this space, to talk about forming a group to try to come up with some uniformity and structure around blockchain, because it is an intimidating term and people don't understand it. I had to have it broken down to me where I had to look at it as, okay, Bitcoin's the end product, that the blockchain is the assembly line. It's like being in a manufacturing plant for Toyota, and the end result's the truck or the car, but the blockchain is what creates it along the way. And that was what clicked for me.
Very helpful. My origin story in this regard was I had invested in a guy named Gavin Andreessen in the late 90s. He was CTO of a company that I'd backed, and he's kind of a wacky guy, but we'd stayed in touch. He's a very clever guy and a very non-consensus guy. And he came to my office in 2011 and said, I'm doing this new thing called Bitcoin. He was at the time taken over from Satoshi and was the chief engineer of the Bitcoin Foundation. And I was like, well, what is that? And he walked me through it. And he said, I actually have this website called the Bitcoin Faucet. And if you go to this website, all you have to do is visit it and type in your email address, and it will give you a Bitcoin. We're trying to stimulate this thing, and we can't think of any way to do it. And so we created this faucet where all you have to do is go to a website. We'll give you a Bitcoin. You can come back once a week if you want. We're giving the things away. I did not go to the website once a week. I did buy some at that point, but to me, it was like that crux of that problem, Wences, that you refer to, which is this moment of life where one day you can't give it away. And then, Bitcoin today is trading at $1,500 a Bitcoin. That would have been a profitable website visit for anyone who decided to go. So we all have our origin stories. While we're on digital currency, and I do want to delve deeper into these questions about the blockchain, I think for entrepreneurs thinking about building businesses, a deeper understanding of the concept of blockchain and whether or not it's useful for you is something we want to explore. But let's stay on digital currency itself for a second. Bitcoin has 60% of the total market cap of all the value of all digital currencies. Bitcoin has 60% of the value. That number used to be 100%. And there has been a proliferation of other digital currencies. And Wences, I'd love to get your take on Ether and Augur and Litecoin and all these other coins. Is it a distraction and a sideshow? Do they have a role? Do you think that 60% market share goes back up to 100 or goes down and we end up with a pantheon of digital currencies? What's your view?
trust is not binary. It's not you have trust off or trust on, right? There's a continuum of trust. And specifically with a database, you can say, I trusted a little bit more. I trusted immensely. I trusted with anything. And in a blockchain, that is measured in how easy it would be to overwhelm it or make it, how do you say, to compromise it, right? So if I have a database, if I have a blockchain, it's basically a database. How much I can trust it is a number, and it is how difficult it is to compromise it and make it say something it shouldn't say. From that point of view, the Bitcoin blockchain is the only blockchain, right? Period. The rest are all theories, experiments, nice concepts, but no one would run anything mission critical on any other blockchain than the Bitcoin blockchain. If you look at the hashing power it has and how difficult it would be to overwhelm it and compromise it, it's the only one. And that's one of the things that gets lost with all this noise. People talk about blockchains, and I have not been able to see any other blockchain. Once you have that fundamental piece of software or service, it doesn't really make sense to create, again, for a marginal need, a new use case. It would be like saying, wow, the internet is great. Let's create another one for email, and another one for Skype, and another one for the web. No, just build it all on top of the internet, right? So I'm not saying that there are no use cases for other blockchains that do something different than the Bitcoin blockchain, but the ones we're seeing right now, my guess is it goes back to 100%. Bitcoin today, it used to be 99% of the market cap, now it's 60% of the market cap. It's still 99% of the hashing power, of the users, of the daily volume, of all the metrics that really matter, right? So to me, it goes back there. It may one day we may see a different blockchain that provides a service different than this blockchain for which there is a market, but
haven't seen it yet.
No.
Let me, so we're sitting up here with bright lights in our eyes. Our ability to see you with your waving hands is low. We're going to have a high bar here for asking questions, therefore, which is you're going to have to stand up and yell it, and then someone will come up with a mic. But again, I've seen Endeavor entrepreneurs do far more crazy things. We do have a hand waving here. We've got a mic coming to you, sir.
Hi, I'm Saman. Let me just stand up. So yeah, you mentioned that there's about a 20% risk of failure, you estimated. How much do you think, what are the major risks do you think we need to overcome to ensure, other than social consensus? And is that estimate based specifically to Bitcoin or cryptocurrencies as a whole? Do you think ultimately society might come to accept one form of cryptocurrency?
When I say 20%, it specifically referred to Bitcoin. If Bitcoin were to fail, if that 20% were to occur, I would imagine that some other cryptocurrency will take its place. I don't think that that's going away. My 20% estimate is highly speculative. I find it useful for me to have a number and to force myself to estimate a number, but it's incredibly speculative. And to answer your question of how is that 20% composed is witchery, highly speculative. In my opinion, there is a small percentage that is technical failure. I think that no other system ever has been more audited than Bitcoin because of the reward of finding something that is wrong. But it could happen. Technical would be some technical failure, exploit, hack that we haven't figured out. That's always a possibility. Combined with a problem with how we scale it and make it grow, because it's not a static thing. It needs to keep growing, and we can screw it up as an industry in how it evolves. For me, that is a small part of the 20%. The bigger part of the 20% is by the value going to zero. These tokens are worthless. They are worth, today we are paying $1,500 for them because we all decide they're worth $1,500. But if we all decide that they're worth zero, they're worth zero. And I could imagine a scenario in which, right now, the healthiest thing that I see in Bitcoin is that nobody has money into Bitcoin. Most people do not have money into Bitcoin they cannot afford to lose. So when it went from 1,200 to 200, you didn't say desperate selling. Nobody had their life savings on it, right? If that changes, if at some point you begin to hear people tell you that they just got their college fund for the kids and put it into Bitcoin, or their retirement and they put it into Bitcoin, then I would worry a lot, and I would be almost certain that this doesn't end well, right? Because that at some point creates forced selling. Someone who has money they cannot afford to lose, they lose 30%, they have to sell, that forces, and that spiral can end up in zero or in $2, which is equivalent of zero, and I don't think you can recover the public's trust for a generation if that happens. So two things that you can do is, one, make sure that people have an amount they can afford to lose, and two, ironically, until we get to cruising altitude, which I think we're very, very far, there will never be more than 21 million Bitcoins. For Bitcoin to be the global standard of value and settlement, it needs to be worth trillions, not billions. The only way we get from here to there is with as much volatility as possible, because that's what keeps the money in Bitcoin honest. So I worry when the volatility goes down, because it's attracting money that it shouldn't be here. When the volatility is nuts, it makes me relax a little, because it's like shaking the tree, and it keeps the money that should be there and not other money. But that's the number one scenario I see in which it's very easy to see it fail.
There's a thing going on in a related topic that entrepreneurs should know about, which is the initial coin offering phenomenon. We have some opinions here in the panel, not surprisingly.
Got a little tense.
So initial coin offering is the latest way that entrepreneurs have found to raise money. And I'm going to attempt to explain it. There are many variations of it, and there are people that are going to disagree with my explanation. But this falls in the category of, things you ought to know about, and then I'm going to have Wences tell us why, the perils of it. But companies are setting up tokens. They're not calling them currency, but tokens that are somehow native to the business model. So a company that is doing a prediction marketplace, for instance, might issue tokens, and only people who have tokens can be part of the panel that judges and determines the outcome of a particular wager, for instance. Or you could imagine a company like Twitter, a social networking, issuing tokens and rewarding people who have popular posts, and people can use tokens to promote posts, et cetera, effectively creating their own economies within their generally community-based business models. So that's something that's happened. And then they're using these tokens to raise money. They're creating a pool of tokens. They're offering a portion of that pool to the general public so people can buy into these tokens. And the proceeds of those token sales or initial coin offerings are generally going to the company for use in building itself, and then sometimes separately to the founders who own these coins or tokens in their own account. There's been, depending on who you ask, call it $300 million raised via this method in the last 12 months, up from maybe 100 prior to that. And it is part of the business plan of a lot of companies in Silicon Valley right now. Who needs venture capital when you can get your users to fund your business? And then generally these things are being built on a version of the Bitcoin blockchain, or potentially sometimes on the Bitcoin blockchain as the ledger for tracking these tokens. Wences, do you think this is a good way to raise money for a business, or a potentially problematic way to raise money for a business?
I would say, first, the obvious thing, which is, as an investor, if any of you considers buying these things, know that it's super risky. It's like going to the casino, right? It's even riskier than what I said about Bitcoin. I'm not saying don't buy them. I'm saying just know that it's the riskiest thing, one of the riskier things I can imagine. As an entrepreneur, I think if I were a first-time entrepreneur or an entrepreneur looking for something to do, I would definitely be playing and exploring. It's a super, super, super interesting technology, tools, right? There are things like, especially, there are some people who are doing this completely disconnected from, it's like Twitter, if Twitter were to just issue some shares on some tokens. But most of these are companies that are somehow related to the crypto space and blockchain space. And I think for a lot of those companies, it makes sense. We're going to see a high mortality ratio. We will see fraud. We've already seen founders run away with everybody's money. And But I don't think that that should scare entrepreneurs. I think there's something there to be explored. And just like I was lucky in 1992 to explore the internet before most people did, and it changed my life. If I were doing that today, I would be exploring these kind of things. I would be exploring like the technologies of rootstock or blockstack or blockstream, which enables you to do things that were unthinkable, right? And one of the things that you can do along with that, if it comes sort of naturally, you're playing with these technologies, you say, I need to go raise money. Wait, but I could just issue tokens, and right? It's tricky. Because it's not yet regulated, it requires the entrepreneurs to behave in a very ethical manner out of just because this is the right thing to do. But right now you're trusting that they will because there's no regulation, right?
So I'm part of a group that's exploring this right now. It's an insurance and engineering blockchain consortium. And we're looking at using Open Ledger. We're going to call our currency a quant. It's going to be we're going to use BitShares. And we're looking at exploring and setting this up. So a group of engineers. So we'll see where it leads. But there is a cost to get into this game, and we're evaluating that cost right now just to set up what we need to get to that point. Right now we're just testing, but it's fine. It's fine. So, but you have to understand it's money you can lose, so you got to be willing to go into the investment knowing that.
And this you mentioned the last year, but the last couple of weeks have been crazy. And that's basically like we are seeing not less than $20 million being raised every week, right? And sometimes more.
It's going vertical right now.
Yeah.
People are starting hedge funds to buy these things. And personally, I think that anything that reduces the demand for venture capital is a terrible idea. Full stop. So we've talked about digital currencies, Bitcoin, others. We've talked about these initial coin offerings. But let's talk about the blockchain. I think if you were to trace the arc of the media mentions of this phenomena, the early days were about Bitcoin itself, its mysterious founder, the price of Bitcoin, which was skyrocketing, et cetera. And then the price settled down, and a lot of the heat moved to this concept of the blockchain. And you had this phenomena of financial institutions very aggressively saying, we're not interested in Bitcoin per se, that's for scoundrels, but the technology under it could change everything, and so committees were formed. But what's real, what's not real? Christa, I'm going to put you on the spot here. What you've been drawn to it magnetically, and it's become a big part of your working life. And what have you seen that's convinced you that this architecture is going to be important? And what have you seen that's made you feel like, oh wait, maybe there are real hurdles to overcome here?
So going back to your question, the underlying technology, blockchain, is here to stay, for sure, in a variety of industry verticals. In the financial sector, we were talking about this earlier, I think the financial sector will be the last to adapt, to adopt the technology. There's so many hurdles and challenges for my industry to overcome, and right now, we're seeing people that are leaving R3, which is this consortium that was built. There's, 65, 70 banks that are part of it. Yeah, at its peak. And we're seeing offshoots where a lot of banks now they're getting their own patents and they're going down their own paths, or they're belonging to multiple groups, because who knows who's going to be the front runner? It's just like with Bitcoin. There's all types of variations, and nobody knows if it's going to be one version or multiple versions. So the biggest hurdles I see is obviously regulatory. Consensus is huge. Banks don't want to share customer information. And there's a big deal right now over public versus private blockchains and how the regulators are going to view that. So there's a lot of transparency that comes with the technology, so there's some advantages for the regulators to be able to get real-time data versus we have to file call reports every 90 days. So they have it ends up being a look-back period for them right now versus they could have real-time data to what's happening based on economic conditions. So, but a lot of low-hanging fruit, a lot of cost saves. I'm a workflow and process improvement fanatic. And I just see something that takes, if you look at commercial real estate, an end-to-end commercial real estate process right now takes anywhere from 45 to 60 days. From the time that you decide you're going to buy a piece of property and I'm going to be the one that's going to sell it to you, and then you go into the bank to get your financing and everything that goes along with that. That process is highly manual. There's a lot of people involved. I would say at easily anywhere, even the most efficient process has 25 to 30 people manually touching the loan file at some point. Plus you've got third parties involved if you're doing environmental reports. You've got title companies involved that are opening escrow and giving you your preliminary title reports. You've got easement stuff you're looking at. Well, guess what, guys? We're not going to need title insurance with blockchain technology. Title insurance disappears. Because why are we all paying for title insurance right now on our home loans or for our homes or for commercial real estate? It's to insure against their heirs when they're recording title for us. So there's lots of low-hanging fruit for process improvement, efficiency gains, and the cost saves are exponential in the financial sector. It's estimated anywhere from 30 to 50% in compliance costs to in just the trade sector. So it's here to stay, but financial institutions will be the slowest one to adopt.
It feels like the only real use case so far of Bitcoin and blockchain for the financial industry has been to make them realize that it's unacceptable in the 21st century to take 3 days to settle a security trade. And they say, oh, really? Wow. So it put a little bit of pressure to bring them to reality. Or, for example, I've done this experiment a couple of times because people didn't believe me. It's a lot faster and cheaper to FedEx cash to Australia and to send a wire transfer in the 21st century. Right? So because people are talking about Bitcoin and blockchain, it has put some pressure in the bank to say, hey, maybe we should do this differently. From there to assuming that they need the blockchain or any form of blockchain, I don't see it yet. I mean, what they should do is run Swift differently, right? But they don't need trustless, they don't need permissionless. They need to build systems that are not running in Fortran. I don't know what they.
Part of the problem is that it's just bricked up technology. It's
Yeah.
layers and layers of vendors linked into the core providers, and that's the problem.
But all of these consortiums, they don't need Bitcoin or blockchain or any other blockchain. They just need, because this is going to be trust. You have to trust these banks. And it's going to be permissioned. You can do that with an Oracle database. You don't need Bitcoin or blockchain for that. So it's just marketing, PR, and it's almost funny to see what they say. It's funny to talk to the people who are in charge of these things and understand that what they want to do, they don't really need blockchain for anything.
So this is a key point that's, it feels like a semantic point. We're talking about what a word means, but I think it's worth at least parsing this. I'll do my best and tell me if I get it wrong. What Wences is saying is that fundamental to the meaning of blockchain is that it be trustless and permissionless.
Correct.
Meaning no central third party. Nobody is watching to make sure it's okay. No one can roll it back, and anyone can be a part of this transaction network.
And everybody can see it.
And it's entirely transparent. Those conditions are not met by any of the so-called blockchain projects that you read about in the media. Those are distributed databases, meaning multiple copies, and they may be transparent to one extent or another, but they are always a club of people you need permission to join, and there is always some oversight function. I'm using the word always pretty loosely, but basically always.
Yep.
And so we can talk about whether they should be able to use the word blockchain or not. We should certainly, I think, among us, agree that it's a little silly that they use it so obsessively.
I agree.
And it's a way of harnessing the marketing momentum that that word has in the general public. And it's a way of being controversial and sort of getting a frisson of excitement if you work at a bank. But it's database modernization projects that have some subset of the wonderful characteristics of the Bitcoin blockchain, and frankly never have those transformational subsets that Wences said happened the moment Bitcoin was born.
Yeah, I'm definitely starting to see people talk more about digital ledgers as opposed to using the term blockchain. But blockchain is still widely used.
I think it's exactly what you said. It's the banks need to modernize not only their database but also their workflows, and this puts a little bit of pressure. I haven't yet seen a compelling case why a bank should use a blockchain. Right? And I've seen more than one bank CEO say, you know what, I'm tired of analysts asking me what we're doing about blockchain, or the press, or I saw my competitor do something, we need to do something. But if you look at where these projects reside on the bank, it's always in some lab or innovation group or something with no P&L, no power, relatively small numbers, small budget compared to the bank. It's really a joke.
I would agree. I would totally agree. They're operating in a vacuum, and a lot of times the executive leadership of the banks aren't even involved. They're sending somebody to conferences because they need to look and feel like they're leading innovation. But the reality is it really is, it's a digital ledger improvement process. I don't know what's going to end up morphing out of it. It'll be some version of the blockchain, but who knows what it'll end up looking like 10, 20 years from now. There's a lot of testing going on, but it's in very small little vacuums, inside of anybody that's vertically integrated, though, outside of the financial sector, there's a lot of benefits.
In a world in which, in that 50% in which Bitcoin succeeds, I imagine a world in which Bitcoin is the global standard of value and a global standard of settlement. A global standard of value, we know what it is because we had it for 5,000 years with gold. And it's something crazy where you could compare what it took a king in China to set up an army with what it took, how much it cost Cleopatra to set up an army. Very different geography, very different time periods, and you can compare because it's gold versus gold, and it's very comparable. If I want to compare what my grandfather paid for the cabin in Patagonia with what your grandfather paid when they came to the US or something, it's really hard to do, much harder than it should have been, right? This is the equivalent of, imagine that there's a meter in Paris, right, inside the glass cage. Imagine if it was politically manipulated, and this year is a little longer, and then they make it shorter, and it would be a mess. In value, we have that mess, right? And we shouldn't. So if Bitcoin becomes a global standard of value, it will be different than gold. It has embedded in itself a global standard of settlement. So I imagine that it replaces all of today Fed, Wire, SWIFT, talking 20 years time, but it would make sense that when you look at a country, the most important thing that they have in the reserves is Bitcoin, not gold and not dollars, right? And when you would look at the bank tier 1 capital, most important thing that they have there, again, is Bitcoin, unlevered, right? And anyone can settle with anyone regardless of politics. If Russia is at war with China, a Chinese bank can still settle with a Russian bank because they both have this and this. So that is the layer that I would imagine that one day may touch banks where blockchain is really relevant. They all need and want a standard of value and a standard of settlement. On top of that, they can build proprietary systems, hopefully better than what they have today, right?
I can just see people in the audience with Coinbase, Xapo open, buying Bitcoin as we were speaking. This is what happens when you give this guy a microphone. Fifth row there, yes.
Hi, you just opened a question that I'm going to do to you. It's like a country like Ecuador, they have the dollar economy, and they have a lot of hassle because of the interest, and they cannot deal with their own economy. So they're trying to put out the digital money system. I don't know if that has something to do, like the president or whatever, he wants to put like another Bitcoin for the country to have control of his economy or something?
So Ecuador has dollars, like a small number of other countries like Panama, and Ecuador has this big initiative to create digital dollars to foster more people having accounts, and especially cell phone, mobile accounts, and to do that they basically imitated the Bitcoin blockchain, but one that is run by the central bank. Canada also did something similar, and I think it makes sense. I would do that if I were a central bank to facilitate the digital circulation of my money the same way you let cash circulate physically, let cash circulate digitally. Those efforts make sense. I think that even in a best case scenario where Bitcoin succeeds, national currencies are not going away. There's no incentive I don't imagine an incentive for countries not to have national currencies. I think this is national, an international, sort of a meta currency, a global currency, the currency of the internet that sits on top of all other currencies, but the currencies are there. It would make sense that at some point those currencies have their digital counterparts, right? It cannot be that Bitcoin is the only digital currency. Sometimes we have to have digital Ecuadorian dollars, digital US dollars, digital euros, digital yen. I think we are going to get there. And there are ongoing efforts in the developed world to eliminate cash that may end up in the same place.
Good question, yes.
Hi, this is a question for Wences. Regarding Bitcoin, it's obviously been exceptionally successful with early adopters. What can we as entrepreneurs and technology entrepreneurs do to help Bitcoin cross the chasm into the mainstream? And what can we build that will facilitate that?
I wouldn't. When I discovered the internet by mistake or chance in 1992, after 6 months, I was completely obsessed with it, and I consider myself like an internet entrepreneur. And I put internet in everything I did, and the name of my company said internet something. And after a few years, I realized that, yes, it was changing my life, but it was just an ingredient. An interesting ingredient, and never again I named internet anything in my companies, and I didn't consider myself an internet entrepreneur, but an entrepreneur who happens to know and understand a magic ingredient that other people took longer to understand. And I would say the same about Bitcoin. I don't think it would be a good idea to go into business to try to foster Bitcoin, because you may lose a lot of time, a lot of money. But it's a good idea to understand the ingredient and to understand some problems that you're passionate about and see if this ingredient makes sense or not. And in a lot of problems, this ingredient doesn't make sense. But in a lot of problems, it's like a magic ingredient. Right? People don't realize that when you buy a book on Amazon, you understand that the information flows through Amazon, but you understand that the book doesn't come through the internet, right? It comes through the mail. We all understand that intuitively. We don't understand so intuitively that the same is true for money up to now. Like, the internet only manages information, but even when you think you're moving money, the money is not really being moved through the internet. The money is being moved just like that book from Amazon, outside of the internet. And there's a lot of use cases. Okay, what could I do if I could really move the money digitally, which is what Bitcoin enables. And that's exactly the job of an entrepreneur, figuring out what can we do with this that is possible now that wasn't possible before.
And on the same line of questioning, and for you, Christa, if you were starting a company today, how would you think about incorporating, let's call it the blockchain architecture? We do need a way of talking about this blockchain that isn't a blockchain. We can call it digital ledgers, distributed ledgers, or the blockchain architecture. Would you make it a priority to figure out ways to use this methodology in your business? I mean, you're an entrepreneur, or is it similar, a magic ingredient that fits some recipes but not all recipes?
I think it's too soon to tell if you could. I mean, heck, I'd like to build a bank out of blockchain and get rid of all the bricked up infrastructure and the 200 vendors that are linked into their core provider. I don't know how realistic that is. I mean, time will tell.
We're doing that. We're doing exactly that.
It's called Xapo.
Xapo.
Yeah, but that's how we look at what we're doing. It's like, just like you could not build WhatsApp without the internet. It doesn't say internet anywhere, but it wouldn't work without the internet, and it makes the telcos obsolete. We're building something that would be impossible to build without Bitcoin. Most of our customers think that they're holding euros with Xapo, or they're holding Turkish lira or Indonesian rupiah, right? And we know that we can only provide service to over 6 million people in over 200 countries, in over 200 currencies, with over 1 million transactions a day, with only 60 employees because of Bitcoin. Otherwise, I would need 6,000 employees. Right?
Over to the left there.
Hi there, Christa from Bulgaria. My question is to Christa. Do you really see Bitcoin disrupting the financial industry? Because as far as I remember, 16 was pretty healthy for the banking industry. And number two, what exactly banking and financial products do you think are going to sit on Bitcoin and blockchain technology? Thank you.
What problems do I see?
Or what products?
Oh, products. I'm sorry, I thought you said product. Well, I see partnerships being created to start with. So I could see banks partnering with somebody like Xapo. You know, to me, the biggest advantage to having a digital currency is for people that travel. You know, the digital wallet, well, you're not having to, you know, convert your currency. You know, if you go to Europe, you're not having to exchange US dollars for euros and et cetera. So I see that happening as regulators get on board and become, you know, more familiar and accepting of some version of Bitcoin. I don't know what it'll look like yet. What was your first question?
When is the financial industry going to be disrupted?
Well, it's being disrupted right now, for sure. So disruptions are occurring all around us in the financial sector, from alternative lending to robo-advisory to the payment space. As far as disruption with blockchain, 10 to 20 years from now, I don't see anything happening in the short run. You know, to Wences' point, I think it's too soon to tell what can truly be harvested from the technology until banks can get on board with one another and there's consensus in how it's utilized.
That's great. Perhaps one last question here in the front.
Yes. Hi. Quick question regarding the payment processors. There's obviously the Visas and MasterCards of the world that, you know, they take a big chunk of each transaction, and obviously Bitcoin can do that peer-to-peer. So what is your take on what the role of Bitcoin would be there? And if there is a place for marketplace to take advantages, I know that in the future the miners will move into making their money most on each transaction. But if there is a place like, I don't know, for Facebook, for Google, that can be the payment processor themselves, basing their technology on Bitcoin or the blockchain.
If I were Visa or MasterCard, I wouldn't worry about Bitcoin for a decade. I don't think it will have an impact. I don't think it has a way of doing an impact. The most important asset they have is a merchant network of millions of merchants worldwide that is very hard to replicate, and you don't create a merchant network with new technology, even if it's Bitcoin. So I think that Bitcoin has a lot more opportunities where you cannot pay today. If you can pay with a credit card, I'll just let that transaction happen with a credit card. But there's a lot of things that cannot happen, not only with a credit card, but no other way. And Bitcoin is the only way. And I think those use cases are more interesting. You had a second part of the question, I think I forgot.
Yes, if there are any other parties, marketplaces.
I think that the big platforms, Googles, Apples, and Facebooks of the world, have a huge opportunity, but in theory, I don't know how realistic it is in practice. The thing is, Google and Facebook, which are some of the largest companies in the world by market cap, rely exclusively on advertising. So all of you are not the customers of Facebook or Google, the advertisers are. And that has a number of challenges. I would argue the first challenge, if I were them, is that advertising may be 3% of global GDP. It can't remain for too long 50% of global market cap, right, or whatever it is today. And it has been, advertising was a hack of Google and Facebook to monetize, because the internet doesn't move money. We only move information. We have attention. What do we do with this attention? Advertising. But if you were to compare the dollar per customer, you know, how many people touch Google or Facebook every day, how much they extract, and how many people touch Nestle or Shell every day, and how much they extract, there's a huge gap in favor of the older companies. And I think now that you can move money, it would be they would have the biggest interest to have easier ways to move money. But I think that there may be already too embedded with the advertising model.
Great question. Thank you all in the audience for your engagement and your kind attention here. This is a great conversation. Thank you to the panelists and, of course, to Endeavor for having us. Let's go out and conquer the world. Thanks, everybody.